Hello there, and welcome to this week's episode of Mondays with Matthew. A decade ago, we started to emerge from a period which saw the United States experience the greatest contraction in housing prices that this country has seen since the Great Depression. Well, that was then and this is now, and my, how times have changed. Housing has not only recovered all the value that was lost during the Great Recession, but US median home prices are now 23.5% above the 2008 pre-bubble high. Given that we've now seen over 8 years of significant price growth, one of my viewers suggested it might be interesting to take on the topic of housing affordability, which is certainly an issue in several markets across the country. And it's a great subject, and also rather timely. Although we are going through a period of COVID-19 induced home price contraction in some markets, and actually nationally, if you look at the main numbers, I believe that sale prices will pick back up again from this temporary blip, and that affordability issues will remain and are likely to actually get worse before they get better. And to get a grasp of the nature of the issue, it's important to look at home ownership over time. And to do this, I pulled data going back to 1890 that shows the share of American households who owned their homes as opposed to those who rented. And as you can see, homeownership dropped during the first half of the century, mainly because of the Depression, but it's been on the rise since the end of World War II, when the GI Bill offered, along with many other benefits, low interest rate mortgages for returning GIs. And when we look at more contemporary data, you can see the home ownership rate took off again in the mid-1990s. And this was actually because of the Clinton administration's National Home Ownership Strategy, which was a major plan to, and I quote, boost home ownership in America to an all-time high by the end of the century, unquote. Well, they didn't quite get there, but the charge continued with President Bush and his plan to increase home ownership, and his was the American Dream Down Payment Initiative, a strategy to assist first-time home buyers with obtaining a down payment to buy their first homes. And as you can see, it worked, with the home ownership rate rising to peak in 2005 before the housing bubble started to deflate and then subsequently burst in 2007. So we were creating a lot of households that wanted to and were becoming homeowners. Demand was there. But what was going on with supply? Well, builders stepped up to the challenge with a peak delivery of new single-family units hitting 1 million in 2006. But when the bubble burst, construction activity fell off a cliff. But even as we emerge from the Great Recession, you can see the number of new homes being built has not increased significantly. And because we weren't building more, would-be home buyers, well, they had to turn their attention to the resale market. But that wasn't helping either. And as you can see, the number of existing homes for sale today is at a generational low. It has been trending down for several years. And I just don't see any reason for this number to rise significantly either. So my point here is that we have demand from buyers, but these new households who really do want to buy, well, they're finding that supply in many markets is extraordinarily limited, with low levels of inventory in both the resale and new home arenas. And what happens when you get a supply-demand imbalance? That's right. Prices rise. And that is central to the issue we face today. Inadequate supply in combination with rising, demographically driven demand has pushed home prices up to levels never seen before. But more importantly, prices have been rising at rates significantly faster than incomes, and that causes affordability issues to appear. Now, there's lots of data sources that look at housing affordability, but I rather like this one, which is produced by the Federal Reserve Bank of Atlanta. And their index measures the ability for a household making median income to absorb the annual costs associated with owning a median-priced home. And I think it presents a very accurate view on home affordability in America. And as you can see, before the crash, affordability was actually rather low. Now that might be counterintuitive, but even though affordability was very low, people were still buying homes. But that was only really because of the remarkably lax lending policies that were the norm back then. Affordability started to improve and looked rather good in 2011 because that was the year that home prices bottomed. And we were actually looking pretty good also until early 2018 when affordability issues reared up again. Now, we did see affordability rising again last year, but that can simply be attributed to mortgage rates that were trending lower. And as you can see, data for April showed us falling back below the affordability threshold again. Now, I can hear some of you saying to yourselves, hang on just a minute, my market is terribly unaffordable, so how does that work? And if you were saying that, you'd be quite right. But as the old saying goes, not all markets are created equal. And this data is from the National Association of Home Builders, who put out a different type of index. And theirs looks at affordability by analysing the percentage of homes that sold in a particular quarter that would have been affordable to households who are making median income for that area. And here I'm showing you the least affordable housing markets because not only are the numbers remarkably sobering, but they also offer a pretty good explanation as to why we have seen a flight away from some Californian markets. Affordability is a significant issue in much of the state. So how can we fix this? Well, if truth be told, it really isn't that difficult in theory. All we need to do is build more housing. Lots more, but also build cheaper. We need to significantly increase the stock of entry-level product. Why? Well, demographics are going to play a very significant part in future housing demand. Millennials are out there in absolutely massive numbers, and yes, a lot of them want to own a home. But right now, they're being priced out of many markets across the country, certainly the markets that they would like to live in. Of course, you've all likely heard about the theory of a COVID-19 induced migration away from our major job centres, with workers able to conduct their business from home. And if that were to happen, then it would certainly help, but only for buyers who choose to move to significantly cheaper locations. And that may mean moving a long way away from where they currently live. And although this does sound like a rather elegant answer to our housing problem, I'm not at all convinced that it will solve our affordability woes. The restricted inventory of housing in much of America is due in large part to zoning restrictions, building codes, and other issues which add significantly to the cost of building a home. And this is the major reason why builders are not building more. It is just so very expensive to produce more and new units. But if we can build more, affordability concerns, well, they don't disappear, but they do diminish quite dramatically. Therefore, it's my belief that the public sector needs to do all it can to assist builders to produce more units, because without that help, the affordability barriers that limit those who would benefit from home ownership, those barriers will remain firmly in place. Nothing, however, will be solved anytime soon. I get that. But we need to figure out how to solve this crisis and start to get back to a more balanced housing market. And balance is something that we haven't seen for quite some time. As always, if you have any thoughts about this subject, or if you have a question you'd like me to address, I would love to hear from you. In the meantime, take care out there. Have a great 4th of July weekend. And I look forward to visiting with you all again next week when I'm going to be taking a deeper dive into the world of young home buyers. Well, I hope you can join me then. Bye now.